So a couple of weeks ago, my friend asked me, why do you buy your stocks and ETFs in euros instead of dollars, especially because you're buying mostly American companies? Well, that got me thinking, because for the past few years, I've always used euros when I'm buying an asset, as long as it's available on the European exchange. So all of this got me thinking, what is the best way for us Europeans to buy in euros or dollars? Hello finance people, my name is Robert and I'm here to share with you my learnings and experience about personal finance as a European. So let me first explain what needs to be taken into account. First, we have currency exchange rates. If you use euros to buy assets from US exchanges, you'll need to convert your euros to dollars. That's pretty obvious, right? The exchange rate at the time you convert will determine how many dollars you get for your euros. And most brokers charge a conversion fee on top of that. Some charge quite a lot, some quite little. Then we have currency risk. When investing in assets that are in dollars, the value of your investment will be affected by changes in the euro to USD exchange rate. And I'll show you in a few seconds a few scenarios so you can see it clearly how it works. On the other hand, investing in euro-denominated assets removes the currency risk, as your returns are only dependent on the asset's performance and not on the currency itself. So let's take a look at a few simple scenarios. I've oversimplified them just so it doesn't get too complicated while explaining this. I'm going to use the fee structure from Interactive Brokers, as they have one of the lowest fees, but the principles apply to pretty much all brokers. So the scenario one, you just buy an asset with euros. Let's say you buy Tesla stock from the Deutsche Börse. First, you invest 10,000 in the stocks and you buy them with euros. Since the stock is listed on the German exchange, you use euros. So that's how it just works. The stock value rises by 20%, so your investment is now worth 12,000 euros. When we calculate the fees, that's 0.05% commission when you buy, and then also when you sell the stock. So it's both ways. So when you apply that, you get in total of 11 euros in commissions. By the way, if you trade with a small amount, the minimum you pay is €1.25 per trade. At least that's how Interactive Broker has it. Okay, then let's take a look at the second scenario. It's same as before, but in this case, you will buy the same stock from American Stock Exchange. So you're about to invest $10,000, but you first have to convert that and you get $11,000 because the exchange rate is 1.1 euro to dollar. Then the stock value rises by 20%, so your investment is now worth $13,200. At the same time, the exchange rate moves to 1.2 euro to USD or 0.84 USD to euro. This means that for 1 euro you get $1.2, so the dollar got weaker than euro, because basically you're getting more dollars now for your euros. Then you take your $13,200 and convert to euros, and you are left with a bit more than 11,000 euros. Then you take into account the fees. In this case, there is a 35-cent commission fee when you buy, and then later when you sell the stock, so that's 70 cents. And on top of that, you pay the exchange fees during both conversions, so that's about 42 euros. And by the way, if you're interested in this type of information, I include similar scenarios in my weekly email newsletter, where I share my thoughts about investing in personal finance from a European perspective. For example, in the last edition, I dove into when is it best time to sell your stock. Is it after it's up by 50%, 100%, or maybe never? So if you want to receive the newsletter, just sign up. The link is in the video description. It'll be first one there. So let's move on to the third scenario. You invest 10,000 euros, then convert that to dollars and get $11,000 at an exchange rate of 1.1 euro to USD. The stock value rises by 20%, so your investment is now worth $13,200. At the same time, the exchange rate moves down to 1 euro to USD. So they're on par with each other. This means the dollar got stronger compared to euro. Then you convert your $13,200 to euros and you have 13,200 euros left. Then you take into account the fees. In this case, there are again the 35-cent commission fee when you buy and when you sell the stock, so that's again 70 cents. And on top of that, you pay exchange fees during both conversions, so that's 46 euros. So it's a bit higher in this case because you made more money. But hey, let's summarize all of these three scenarios. You've invested invested the same amount and the stock went up by same amount as well, that's 20% in all scenarios, you have very different results. So the first one, you're left with 12,000 euros minus the 11 euros in fees. And in the second scenario, where the dollar got weaker, you actually have about 11,000 euros minus the 43 euros in fees. And then the third scenario, where dollar got stronger, you're left with 13,200 euros minus the 47 euros in fees. As you can see, the currency can have a huge impact. Now, let's be honest, it's rare to see the currency to jump as much as it did in this scenario, but still there's a certain risk you're taking. Also, because of currency exchange, you have higher fees when you're trading. But obviously, if the 47 euros fee is nothing if the dollar strengthens as it did in scenario 3, but you never know which way it will go. So what can you do? How can you manage this risk? Well, there are a few simple strategies to manage this currency risk. First, you can diversify. You could buy assets in both euro and dollars roughly equally. The second way is to buy hedged ETFs, because some ETFs are currency hedged. Basically, they promise to cover you for currency risk, but it works both ways. So you won't benefit from when the dollar gets stronger. It just stays the same and you just look at the value of the asset. The third, you could try to time when you do the currency conversion. So basically, you would wait until the exchange rate is favorable for you. For example, you could simply reinvest the money back into another asset and wait for better days. But this is really hard to predict, and there would be other risk with that. So probably this is not a good option for basically anybody. Now, going forward, I will try to diversify my assets so that some are in euros and some are in dollars. What makes this even harder is that you could buy assets in euros, like a VUSA ETF, but since it tracks the S&P 500, the currency risk is already included in the VUSA trade value. But anyway, what about you? What currency do you use when you trade? Let me know down in the comments. Now, I've been investing for the last 6 years, and there are a few mistakes that I really wish I hadn't made. Without them, my portfolio would be probably double the size. That's why I created this video right here, so you can avoid losing time and money by making the same mistakes.